Hey everyone, welcome back to Corporate Decoder, the place where we unpack corporate filings and find hidden truths. And folks, Parker-Hannifin's latest proxy statement is quite the read. It is packed with details on who is getting paid what and what the company is planning for the future. And let me tell you, some of those numbers are pretty revealing. Parker-Hannifin, a big name in motion and control technologies, is holding its annual shareholder meeting soon. And this document is essentially the roadmap explaining what is on the agenda. Think of it as the company giving you a heads up on who they want to have on their board and what they're paying their top executives. They also want shareholders to weigh in on their auditor. Now, the company is very proud of its board of directors, and they've given us a good look at who they are. They emphasize diversity in various forms, gender, race, ethnicity, and experience. They seem to believe that a well-rounded board with people from different backgrounds and with different expertise is crucial for good decision making. Looking at the director nominees, you see a lot of experience running major companies. People like Kevin Alobo from Stryker Corporation or Jennifer A. Parmentier, the current chairman and CEO of Parker, Hannifin itself, bring a wealth of executive leadership knowledge. They also highlight manufacturing experience, risk management skills, and international business exposure, which are all vital for a global company like Parker. They even break down the key skills and experience for each director nominee. This table really shows how they are trying to cover all the bases, from finance and accounting. That Linda A. Harty brings from her time as treasurer at Medtronic Incorporated to technology and innovation. That Denise Russell Fleming brings as CIO at Becton Dickinson 20 Company. James L. Wainscott, the lead director, has decades of experience in the steel industry from his time at AK Steel Holding Corporation. Now let's talk about how these directors are compensated. For fiscal year 2025, non-employee directors received a base annual retainer, which varied depending on their committee roles, ranging from $155,000 for regular committee members to $230,000 for the lead director and corporate governance and nominating committee chair. On top of that, they received stock awards with a target value of $180,000 per year in restricted stock units. For example, Linda A. Harty, who serves on the audit committee and the corporate governance and nominating committee, earned $161,000 in cash retainers and stock awards valued at $188,280. James L. Wainscott, as lead director and chair of the corporate governance and nominating committee, received the highest cash retainer of $238,000, plus his stock award. It is clear the company values their directors' time and expertise, and it is reflected in their compensation. Alright, moving on to the big players, the named executive officers. This section details how Parker-Hannifin compensates its top leaders, and it is heavily weighted towards performance. They break down compensation into base salary, annual cash incentives, and long-term equity incentives. The goal is to align executive pay with the company's performance and shareholder value, which they call pay for performance. Looking at the summary compensation table for fiscal year 2025, we see the actual numbers. Jennifer A. Parmentier, the CEO, had a total compensation of over $19 million. A significant chunk of that, over $6 million, came from stock awards and another nearly $7 million from option awards. Todd M. Liam Bruno, the CFO, earned a total of about $7.8 million, with a substantial portion also coming from stock and option awards. Andrew D. Ross, the President and Chief Operating Officer, had a total compensation of nearly $9.9 million, again with a large piece from equity. Scroll other compensation, sometimes, and in the all other compensation column you see perquisites, company contributions to retirement plans, and life insurance premiums. For Ms. Parmentier, this category alone adds over $1.2 million, mostly from company contributions to retirement plans and executive physicals, leased vehicles, and corporate aircraft usage. It is a generous package designed to attract and retain top talent, but it does make you wonder about the alignment with the average employee pay. Speaking of which, the report also includes the CEO to median employee pay ratio. For fiscal year 2025, Parker-Hannifin, CEO Jennifer Parmentier, earned approximately $19.3 million, while the median employee earned around $66,000. That is a ratio of about 293 to 1. This is a pretty high ratio even for a large corporation, and it highlights the significant gap between the top executives and the company's average worker. They VUs the same median employee as last year, suggesting no major shifts in the overall compensation structure for the majority of their workforce. Now, let's look at the pay versus performance table. This is where we see how the company S pay decisions stack up against its actual financial performance and shareholder returns. For fiscal year 2025, compensation actually paid to PAO2, which refers to Miss Parmentier, was over $45 million, a significant increase from the previous year, while her summary compensation table total was about $19 million. This difference comes from how they calculate compensation actually paid by adjusting equity awards. The average compensation actually paid to non-PAO NEOs was over $11.8 million. What is interesting here is how the pay actually paid disconnects slightly from the reported summary compensation. For Ms. Parmentier, the compensation actually paid is significantly higher in 2025 than her summary compensation table total because of adjustments related to equity awards. When you look at the financial performance metrics, while the TSR and peer group TSR have been quite strong, especially with a 408% return in fiscal year 2025, and net income has generally trended upwards, the link between the executive pay and these specific performance measures isn't always perfectly straightforward. For example, in 2022, while their net income was strong, the EPS growth relative to the peer group was only at the 28th percentile, which seems a bit mismatched with the total compensation. The company says its most important financial performance measures are EPS growth relative to peer group, segment operating income, sales revenue, cash flow margin, revenue growth relative to peer group, and average return on invested capital relative to peer group. They aim to tie executive pay to these metrics, and while the numbers show strong performance in many areas, the massive compensation packages for the top brass still raise questions about fairness and true alignment. Finally, the shareholders have a vote on ratifying Deloitte Frinti Tache LLP as their independent registered public accounting firm. This is a pretty standard part of these filings. Parker-Hannifin has been audited by Deloitte since 2008, and they seem to be comfortable with their performance. The fees for these services are detailed, with audit fees for fiscal year 2025 around $13.3 million, plus additional amounts for tax and other related services. Now, looking at the whole picture, Parker-Hannifin is a company that is clearly delivering strong financial results with impressive growth in revenue and earnings, and they seem to have a solid strategy framework in the WIN strategy. Their board is diversified with experienced leaders, and their commitment to shareholder returns is evident in their consistent dividend increases and share repurchases. However, the sheer scale of executive compensation, especially when compared to median employee pay, and the sometimes complex calculations of compensation actually paid, does create a bit of a disconnect. While performance is a key driver, the extreme wealth accumulation at the top could be a point of contention for some shareholders. The company S Direction seems focused on innovation and expanding its portfolio, particularly in electrification, which is a smart move in today's S market. The risks seem to be well managed, with a strong emphasis on oversight from an independent board and committees. So, what is my take? Parker-Hannifin is a financially sound company with a clear strategy and a capable leadership team and board. The executive pay is very high, but tied to performance, which is what they say they want. The large gap between CEO and median pay is a significant talking point. The company is navigating significant market shifts, especially with its focus on electrification, which looks like a smart forward-thinking move. Alright, that is our breakdown of Parker-Hannifin, latest filing. What is your take on these numbers and what they signal for the company S future? Do you think the executive compensation is justified by the company S performance? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description where we break down more of these corporate documents and discuss them in real time. Thanks for watching. See you next time.